Absolutely. All right, domestic consumption. Talking about consumption, that's my first talk this morning that we're talking about. We're going to run through it because so much to cover in terms of policy, results, so much happening. ITC, big numbers came in post-market close. I'm starting with ITC. You could look at it as a neutral, but I'm going for a thumbs up simply because of what the cigarette earnings are showing. Bad for a society if cigarette earnings go up, but great if you own the ITC stock. It's a key positive. Cigarette revenues are up 7.8% this quarter. The cigarette business, remember, contributes over 70% to ITC's earnings, so which is why you need to look at it from that point of view. The agri business is also up 9.6%. That's heartening. You will see margins, and we'll take you through the key numbers, but you'll see margins down due to the FMCG and paper business segmentation. Nice, not too bad on taxation on cigarettes. That's also aiding volume growth. It was skipped this budget as well. In terms of core numbers, revenues up 8.5%, 18,290 crores is the number. EBITDA up 1.6%, so completely flat. Margins have come down, and the management is saying also very clearly that it is raw material costs which have eaten into the margins. Net profit is up 1.2%. Q3 also saw an exceptional item of 12.18 crores owing to the demerger of the hotel business. Tax expense of discontinued operations of 72 crores on hotel business demerger were also there. There was an interim dividend of 6.5 rupees per share. The management commentary talking about sharp cost escalation is important in key input materials. Strong performance continues in premium portfolio, they say, and alternate channels. Higher leaf tobacco cost partially mitigated via product mix enrichment. I must add that they have announced an acquisition as well of Prasuma to add to their ready-to-eat segment and frozen foods segment. So that they're going to do over 3 years and acquire the Prasuma brand in the next 3 years. 100% acquisition is what it is, and it's a fairly decent brand. So ITC, wait and see what happens. It's a bit difficult to gauge what the street will expect, but purely on numbers, it's a thumbs up. So is it for Airtel as well, because the India mobile services business was above estimates. That's key for the street to watch. Subscriber addition was also in line. On a consolidated basis, numbers have beaten estimates, and subscriber growth has surpassed Jio in this quarter. In Q3 FY25, India mobile service earnings saw revenues up 5.8%, EBITDA up 9.1%, and subscribers at 357 million versus 351 million in Q2. ARPUs, which is average revenue per user for Q3, was at 245 rupees versus 233 in Q2, and capex at 4352. Net debt has also declined by 11,000 crores Q on Q to 1.33 lakh crores. So that's a thumbs up. So is an Auro Pharma, actually. Revenue was a beat. Margin and net profit were in line. It was the highest ever quarterly revenue for the company. Revenue in growth markets formulation increased 39%. US revenue, though, was down 2.3%, and this accounts for 46% of consolidated revenue. A slight margin miss due to higher employee costs and higher R&D expenditure. EBITDA margin before R&D is at 25.8%. So that's one key point to watch. The core numbers there on your screen. Revenue up 8.5% to 7979 this quarter. EBITDA up 1.7% to 1628, and margins have narrowed from 21.8 to 20.4, but not a massive downtick for Auro Pharma.
Right. I've chosen to speak about the automotive space and the allied space. So the first one that I will talk about is a tire company, and it is a disappointing set of numbers. Another tire company is reporting similar numbers. So let's take a look at the headlines. You've got the revenue that is up about 5% or thereabouts. It's more or less in line with expectations, but the problem is in terms of the margin. You have margins that have come in at 13.7%, and that compares with 18.3% in the comparable quarter. The consensus estimate had pegged it at 15.1%, and that's going to be a bit of a disappointment. We've spoken to several analysts over the course of the last month or so, and they've all talked about raw material pressures and inability to pass on in the way of pricing being a problem for these companies. Net profit as a result of which is down as much as 32% and coming at 337 crore rupees. That is also a significant miss compared with the consensus estimates. The second one is Motherson Sumi Wiring. And here too there is a problem in terms of margins. You have revenue that is a decent 9% growth, 2,300 crore rupees. And you could argue that this is more or less in line with expectations, but the margins have come in at 10.3% compared with 12.4%, and the estimates had pegged it at 11.2%, so it is a considerable miss. The PAT number is down as much as 17%. BofA had a note out on Motherson Sumi Wiring. It has cut its target price very marginally to 60 from 62. And it has maintained a neutral rating. It says that the margin was a drag again, and the Q3 miss was on the back of startup costs for a new plant. This is essentially what has caused the operational issue. You have margin stability going forward, which is going to be a key monitorable for this brokerage, and valuations currently are capping the upside. Finally, Hero MotoCorp. I left the best for last. This is a thumbs up on the back of strong numbers. The revenue has increased 5%, coming at 10,211 crore rupees. The PAT number is higher by 12% or thereabouts. And it is a strong margin performance because the margins have expanded by 50 basis points to 14.5%. And what is critical to note here is the reason for that is that raw material pressures have come off to a certain extent for this company. In fact, you have a metric which is looked at in terms of raw materials as a percentage of sales, which is coming at 65.76 versus 67.3 in the comparable quarter. Neeraj.
Yeah, okay, I'll go very quickly with the three stocks on my radar. The first one is PI Industries, and the reason why it's included in the list because the numbers were okay, but they revised the guidance lower to single-digit revenue growth from high single-digit for FY25. And remember, they had revised the revenue growth guidance from 15% to high single digits earlier as well. So consistently bringing down revenue growth, and that could be a problem for PI today. So keep an eye out for this one. Keep an eye out for Bekaji Foods. Margins came off 7.8 versus 12%. Profit after tax down 38%. Not quite something you would expect in a festive quarter, if you will. So maybe this one reacts negatively too. The one which is a positive reaction, TD Power, revenues up 44%, EBITDA margins at 17.5 versus 12.1, expected, and PAT up 50% at 45 crores versus estimated 28 crores. Really robust set of numbers on all counts, and this one could react positively. More negative than positive numbers today, but there are a few which will stand out like Airtel, TD Power, and some others.